If you've ever flown Spirit, like I have, you know that they're a cheap, no frills kind of airline. Your ticket prices are going to be the lowest, but you're also not going to have necessarily the most, call it, luxurious experience on their planes. And now, after the share price has fallen so much, I wonder if it's a budget stock where maybe it doesn't offer many frills, but perhaps there's some value to be had here. The stock is down over 90% from where it was 5 years ago, and something like this isn't going to happen without some kind of reasoning behind it. The question is the current price an overreaction in the market, or is it a fact that Spirit Airlines is in fact in trouble and maybe doesn't have much of a future ahead of it? I'd like to welcome you to the Fiscal Philosophy YouTube channel. I currently do not own any shares of Spirit Airlines. I think one of the main reasons people would have been in Spirit Airlines recently would be for the possible arbitrage. Since JetBlue had proposed acquiring them for $3.8 billion, and the current market cap is somewhere, I think, between 5 and 600 million, well, you can do the math. That would have probably been quite a good deal for current Spirit shareholders, or recent ones, had the deal actually gone through. However, the share price has once again collapsed even further, as a judge has indeed blocked the deal. Some analysts are projecting that this judge blocking the merger between JetBlue and Spirit could in fact spell doom for Spirit Airlines, because Spirit Airlines is not projected to be positive from a cash flow perspective or a net income perspective for quite some time. They struggle with operational costs and have a really high cash burn rate. Airlines are very capital intensive businesses, and they happen to have pretty high operating costs. And Spirit Airlines has been having some trouble navigating those facts of life. Now, to see if that's really the case, I think we do need to dig into the numbers just a bit here. Top line faltered during the pandemic, as did most airlines, but as you can see, they did get on the path to recovery since things opened back up and have actually exceeded their pre-pandemic highs in terms of revenue. Anyone looking at this chart of their revenue might think, hey, it looks like their revenue recovered and they've gotten back to and even further beyond their pre-pandemic revenue. Therefore, business is probably good for Spirit. They're probably doing well. I mean, hey, it looks like it's popping and growing. But this doesn't really tell you the whole story. Now, while you do want to see growing revenue, it doesn't do you a whole lot of good if profitability does not increase with revenue. And unfortunately, the earnings per share by Spirit Airlines here has remained deeply negative. According to GAAP accounting, it would seem that they are deeply, deeply unprofitable. Now, you could say, hey, maybe there's some kind of paper losses that they're taking, a bunch of depreciation, maybe they've been taking a bunch of write-offs, but a slightly deeper look will show us that not exactly the case. In fact, this was shocking to me. Spirit Airlines has been mostly deeply free cash flow negative for the better part of this decade. That to me is just incredible. Even in the years where they were showing net income according to generally accepted accounting principles, they were still actually hemorrhaging cash. Truth be told, I don't really know how they managed to do this. There's probably something particular to the airline industry that I'm not overly familiar with. With that fact in mind, though, I would say it's pretty unsurprising that this has resulted in an absolute ballooning of long-term debt over the years for Spirit Airlines. And they've reached a point where this has started to become unmanageable. So I was actually slightly surprised to see how much book value they still had. Although, hey, airplanes, they're worth a lot of money. So, okay, that makes some sense. But they're burning through this book value really quickly. All right. Their liabilities seem to be stacking up and their assets seem to be shrinking. I was reading somewhere that they do leasebacks now whenever they have debt coming due. So basically, they'll sell a few airplanes, pay off a chunk of debt, but then lease those airplanes back. So if you're cash flow negative, what that effectively does, yes, it does get rid of the debt, but you still have to make those lease payments then. So in the long run, it's just sort of extending out the bleeding and perhaps delaying the inevitable. At the moment, it seems like maybe an acquisition is the best chance that they have based on these numbers, but only if there's some kind of improvement in operational efficiency as a result of the acquisition that would get them back to some kind of cash flow positivity or positive net income, so that this bleeding off of book value stops. So, as you can see by the warning on the top of this data feed, analyst targets may not have had a chance to catch up. The price has decreased by over 72% this year. And this is a great, I think, learning example of why analyst estimates should be taken with a grain of salt. They are not the end all be all. They're a data point, I suppose. However, I think in many cases, I find myself sort of disagreeing with the analyst consensus, especially on the high side, though sometimes it's the opposite and I disagree with the low side. On this one, well, I think the low side is probably turning out to be more or less vindicated. If one was to try to value Spirit, a DCF is pretty much ineffective here. Basically, there is no cash flow with which to run in the calculator and discount. But you can see the tangible book value, once again, $12.06. The question here would be, can they return to some type of positive cash flow or profitability before burning through what's left of these assets? And at the moment, unless there is some type of merger or acquisition, it appears to be a no on that front. The rate at which Spirit Airlines is burning cash, to me, from the outside, just simply appears to be too fast to overcome internally without some kind of outside help coming in and helping them restructure. If you made it to the end of the video, I'd like to thank you from the bottom of my heart, and I'd also like to remind you to do me a favor and subscribe to the channel, be notified of all my future videos. Remember to like the video, help it in the algorithm. Follow me on Discord, link in the description, also on Twitter or X. And also catch me on the other channel, Cashflow Kings Live, every Saturday night at 8 p.m. And don't forget, everybody, cash flow is king.